You can win in any single market, but you can't win in every market because the grass always seems greener somewhere else. And so I was living in New Jersey at the time. That's where I was born and raised. You know, we lived in New York City for some time, and we understood that New Jersey, you can win in a lot of ways there, but there's a lot of reasons why it would be difficult to get started there.
All right. So guys, today I have a very special guest. His name is Jason. Jason is up in Nashville, and he's got about 3,000 plus units. He's been doing this for about, quite a few years, since 2017. And today we're going to have a conversation about, his origin to where he's at now, to where he's going. So very excited. Jason, welcome. Thank you for coming on.
Julian, hey, I'm excited to be here, man. Thanks so much for having me on.
Thank you. Jason, a lot of people who have success, they always have a reason to. So I want to know, from your childhood, how did you grow up?
So, actually, I was thinking about this a lot lately. I grew up in a middle-class family, right? And those are lots of times the values that you learn are middle-class values, right? So when you grow up, you either stay that path, right, and just follow the trend, or you say, I think there's something else out there. But most of the time, in many places, even if we say that, we get stuck in the same position, right? We can't break the mold. We can't break the pattern. And we just continue on that evolution and then just passes. And then hopefully the next generation picks it up. And what I found here is that I was doing a lot of things that I just knew weren't my best part, right? But what I would do is I'd go out there and give it my all, right? So I'd go out there, and whether I was, working in a bar or loading trucks or doing construction, right? I would give it my all, but I just found that I just wasn't able to really find my way to something better that would produce something of a greater purpose for me, right? And so while it was something I could find fulfillment in it, if I was going to grow up and, move out and have some kind of wealth or something else where my parents didn't have, right? Because my parents were constantly working paycheck to paycheck. They were constantly in the run mill of it, every week, every month was just struggle. And it was hard to see that. And if I was going to constantly do the same thing they were doing, I couldn't be surprised if I was going to have the same results, right? So I kept asking, what else is there? And it just led me down a number of different paths, right? And so I did come out of school and ended up just working in bars and restaurants, right? But that constantly led me to that question that I constantly ask. Am I doing my best thing? Is there something else I can do? And if there's not, how can I find something else that can be more valuable to me? And that led me from everything from owning restaurants, owning and opening bars. I opened and sold a brewery. I had a construction company, moving into different facets of real estate. And what I kept asking is that, is this where I want to be? And as you do that, you say, okay, yes, I like it. Well, is there something else I should be doing on that path? So when we found real estate, we were doing flipping, we were doing wholesaling, but what it led to is that I was constantly just doing service jobs, right? So if you have construction, you have to show up, and if you don't show up, you don't get paid. If you're, working in bars and restaurants, if you're not there, right, there's no tips, there's no income earned. If you're not doing flips, or you're not doing wholesales, there's no activity, and you're not part of that activity, there's no income, right? So where was the pinnacle piece is that I was always a linchpin in the mold here. So Keely, who is my wife, girlfriend at the time, she was pregnant with our first kid, and we kept saying, listen, we have to find a way to be able to control our day, control our time. We have to be able to find a day to just set a new direction with our life, and how can we do that? And she ended up meeting someone at a real estate meeting who was doing out-of-state rentals. And we said, interesting. And so we were open to the opportunity. We started doing it, but contrary to what he was doing single-family rentals. We started doing multifamily. And that was that aha moment, because what we were able to do is that no longer could we be the linchpin where, something needs to be fixed, we have to run the Home Depot, or now we're dealing with the tenants, right? We had to be empowered to put people in the place that could be in their best spot, but also help the path forward, right? So we'd find the right property manager, we'd find the right contractors, we'd find the right insurance people, the right lenders, right? All the right pieces of the puzzle. However, buying 2 families, 3 families, and 4 families, it was the right direction. And it was that moment that we're like, okay, we're on the path, but we're just not completely in the right direction. So what else is there? And we came upon large apartment investing. And that was that moment when everything made sense, right? Because we had small restaurants and we had big restaurants. And typically in the restaurant world, if you have 2 different restaurants and sizes, it's the same process. You're doing the same things, but you can get more economies of scale. So with the large multifamily, we were able to understand that we'd be able to do a lot more with the same process and get massive results, basically doing the same components. So we sold off the smaller properties, went all in large multifamily, and that was in 2016. Right into May of 2017, we purchased our first 94 unit. And then that was the lead for the next few years to now us accomplishing, buying somewhere around 3,000 units of real estate. About 90% is multifamily, the other 10% is a mix of self-storage, some development, and office retail.
That's amazing. So what led you to this is that you were 100% committed to whatever you were doing, but you weren't getting that leverage. And so then you kept finding the best next thing until you landed into multifamily, which eventually gave you economies of scale. And then since then, you've just been consistently putting in work on that area to scale to where you are.
One of the best things I got from my father was work ethic, right? Work ethic and discipline. However, that can serve two purposes, right? You can have work ethic, and if you're just digging a hole all day, that's just going to be the limit of it. It's just digging a hole. And so where my father would find his difficulties, he would get stuck in the ethic of the work, right? But miss the purpose of where that would take him. And it took many years for us to come together on that part, is that I was able to instill the same work ethic and discipline, but constantly ask the question, is this my best use of time, right? Sometimes we get stuck and like, I'm working hard, but if you're working hard, trying to dig through a wall or knock through a wall when there's a door right to the right of you, you have to ask the question, okay, am I doing the right thing? Should I just walk through the door? And so we kept asking that question and all these different things we were doing, and they were all learning experiences, right? A lot of the things that I learned from everything from the restaurant world, from the construction world, from any of these other things I've done, I use a lot today because we're in a people business, right? So you're understanding how I can work and how I can best part, but I bring the discipline and the perseverance to a new form, which is us investing in multifamily.
That's amazing. So when you found out that your wife knew someone that was doing multifamily, what was your next step to really get into multifamily and learn the business?
Yeah, so honestly, she only met someone doing single family rentals from out of state. It was a long distance approach that was the eye opener to us, because what you think most of the time is I need to do this, I need to go touch it, right? But if you think about something like a building's on fire, you're still going to call the fire department, whether it's here or it's 1,000 miles away. So what we had to learn is the process. And what was the biggest part of this is that we had to put blinders on, because with real estate, there's so many different things, right? And if you go to, a real estate meeting consistently, like 1 month's going to be flipping, the next month's going to be wholesaling, then it's going to be Airbnb, then it's going to be tax liens. It's an evolving thing, because that's what real estate is. So we had to be disciplined to put the blinders on to say, okay, listen, we have done a lot and we've done pretty good in the real estate world, but we're not really getting the results. Why is it? It's because we weren't disciplined to focus. And so what we did is we stopped doing all the other forms of real estate, dialed in completely to learn multifamily. And that would be everything from going out and listening to podcasts that were solely talking about multifamily, to reading books just about multifamily, to looking who else is in the space and asking them questions, right? And then getting really honed in with the market. Like, where can we invest? Like, where are these markets? Like, what are other people doing? And when we found people that were doing the model successfully, we just said, well, that's a model that we can replicate. How can we replicate that for our business? So it was simply being very disciplined to not be everywhere, because today we get stuck. We try to do so many different things at once, and it ends up eliminating us from doing anything. And then we literally saw someone else doing it and said, okay, how can we use that business model and just follow the steps and follow the pattern?
Yeah. Discipline and focus. So can you be open with us about your business and tell us
Sure.
what you're focusing on in terms of
what we're
like
focusing on right now?
Markets, and potentially maybe some systems and processes that you use to make your everyday life as a multifamily investor much easier.
Sure. So what I did in the beginning is I had someone say, listen, you can win in any single market, but you can't win in every market, because the grass always seems greener somewhere else. And so I was living in New Jersey at the time. That's where I was born and raised. We lived in New York City for some time, and we understood that New Jersey, you can win in a lot of ways there, but there's a lot of reasons why it would be difficult to get started there. Higher taxes, higher insurance, higher price points. The price per pound from rent to, of course, buying a unit did not match up. It wasn't landlord friendly, older construction. There was always different reasons why that market wasn't going to stand up. So we started looking for other workforce areas, right? And what came on our plate was Louisville, Kentucky. So I got very dialed into Louisville, Kentucky. I started investing only in the south side of Louisville and looking for 75 to 150 units, BC assets built between 1970 and 2000, valued between 2 and 10 million. And so I got that specific. Now, a lot of people are like, well, that's going to eliminate deals. And my counter to that was, I will look at less deals, but they will be the right deals. And I will know how they function, and I'll be quicker to act. And my thesis was correct because I knew what I wanted, right? It's like, imagine going to buy a car and you're like, today I'm going to buy a car, right? Well, what does that mean? You want to buy a Jeep, you want to buy a Lexus, you want to buy a Rolls Royce, what do you want to buy, right? You just said I want to buy a car. And that's how a lot treat real estate. I want to buy multifamily. Well, that could be a 2-unit, it could be a 200-unit, it could be a building built yesterday, it could be built 100 years ago. Well, the problem is all those buildings operate and function differently, both on just the revenue side and the expense side. And the team members you need different, right? You're gonna have different brokers on the big properties than the small properties. You're gonna have different banks that will work in the loans for those size properties. You're gonna have different property managers for both of those different asset classes, right? So when you try to just analyze everything, you become a master of nothing because you truly don't understand how a property functions. And by the time you figure it out and just figure out how it can work, someone who's solely dialed into it has beat you to it if it is a good deal. So, sometimes we'll have people like in our mastermind will say, hey, I got 100 deals to look at. And the reason is they're not identifying exactly where they want to be, right? Because, you're in Miami, right? There's good sides of Miami, there's bad sides of Miami, right? But, you don't know every neighborhood. So the more you're trying to just understand every neighborhood, sometimes we just don't know if we're on the wrong side of the street, right? It might be the good schools on the other side. So getting really dialed in the beginning led us to have a lot of success. So we brought about 400 or 500 units just in Louisville before we brought anywhere else. And then now we're in 7 markets because we continue to expand and continue to grow. However, in the beginning, that was a really valuable spot just to stay focused into a market. Now we're really bullish. We're in Nashville, we're in Atlanta, we're in Little Rock, we're in Cleveland, Baltimore, and then markets in North and South Carolina.
Got it. And you said that you were in the beginning looking to find the market that really resonated with you. What kind of points resonated with you about Kentucky?
Sure.
Southside.
So we just went to Louisville instead of just even any other spots. Like even today, like for Tennessee, I just invest in the Nashville MSA. I don't invest in Memphis and Chattanooga, Clarksville, fill in the blank, right? Because it allows me to really know the market. What we looked for is that we looked for population growth, right? It doesn't have to be massive, but there has to be some growth to the population. Job growth, another big part right there. Even the more important part of job growth is the diversity of jobs, because you don't want to be in a one-trick pony where just one employer employs the market, right? So, for Louisville, for instance, there was Humana, Aetna, Churchill Downs, FedEx, the Yum Center, University of Louisville, GE, UPS, the Amazon Center, right? 1 million great employers there. So there was going to be ultimate jobs coming to that market. I would look for a market that had about 250,000 people in aggregate. So not just the city, but the surrounding markets, because you want to make sure there's enough people that was going to serve your market right there. Typically looking for landlord-friendly states, so you're not caught with some regulations really difficult to serve, that there is the ability to have workforce housing, right? There's a strong need for workforce housing. So the housing starts is not outstripping the demand, right? Look for vacancies that continue to trend into the 90s right there, or into occupancies in the 90s right there. And then development, what's coming down the pike, right? And this might just serve for parts of the city, but there might be other parts that are served. But those are some of the top 7 or 8 I stood off there that I look for in markets, because it makes sure I'm in a place where housing is a need and it's reasonable to approach to be able to fill a need because the occupancy is staying high.
Yeah, that it's a clear thing that you had going on, that you were doing. Um, so when you start looking at deals, what kind of system do you use to make sure that you take in leads, as in property leads, and make sure that you're following up with them and figuring out, the right offer for them, and then following up later to see if, there's been an offer accepted, or if there's been a change, maybe a buyer fell out or something, and you can come in and make that second offer. What do you do just to keep that pipeline, nurtured?
Yeah. So ideally, it's like on a realm of 10 deals, 7 of them are going to come from some kind of broker connection in my network, and then 3 are going to come from everything else. So when you start, it has to be, what's a system that's going to work for you? So we just started with Google Sheets and Excel, right? And I started a system. I would just put down the column, I put down the contact, I put down their focus, and I would make the introduction. Because unlike maybe the single family world, is that we're not dealing with hundreds and hundreds of leads, right? We're getting the right brokers and the right broker relationships. Like you could close one deal a year, one deal every couple of years, and just do great, right? Because these are much bigger buildings that can also offer much greater wealth opportunity. So it was really creating the right relationships, because say there's 20 brokers in the market, I may only need 2 or 3 who are my allies, who are on my side, or who are part of my team that can bring me the right deals I can work well with. So my goal was to get out to the market, to introduce the market, to let them know exactly what I was working to, but also let my network know, because beyond buying them through brokers, right? I've done direct to seller. I've also purchased through property managers. I've had insurance people bring me deals. I've had banks bring me deals. I've had lawyers bring me deals, because I was very specific with what I was looking for. So they were able. It was like the reticular activator you talk about, is that you put the message out into the world, and people see it for you, you're able to bring it back to you. So doing that allowed me to do that. And now typically the best way is because you're building a personal relationship, is to ask, like, what's the best way you follow up? Should I follow up? It's cool if I follow up every 2-3 weeks, right? To see if anything else comes on the plate there. And it's just going to go to typically how your communication goes. Just like when you're, doing wholesaling or other points, if you do a lot of your communication through Facebook or through text, it's probably going to stay in that vehicle. So, or email, right? It's the same thing. Like with the brokers, if most communication is through text, you'll probably kind of run the text out. If it's through email, and so we'll just jot down their preferred method of communication.
Got it. So just focusing on those key players in those spaces and making sure you follow up 2 to 3 weeks to make sure that you nurture that relationship, and also putting that out there to the world and being very specific is how you got those deals.
I'll give you one other tip there, is that when working with property managers, they are also a very, very, very good source of potential deals, because they may be managing a deal that the people just decide to sell, right? That they just decided to sell for any reason, right? And so on that point, you go and ask them the question, hey, any of your sellers looking to sell? And it's not always a yes, but every once in a while, they might have someone that's looking to sell. Maybe their time's up. They need to get their money back to investors. They're having a partnership dispute. They're not capitalized right. You name it, right? So I've found a couple of deals through property managers, which has been a great resource for us.
Yeah. It sounds like putting your eggs in a couple of different baskets that are sure to give you the right amount of deals is good. And I want to ask a little bit about you and your wife, Pilly. What is important to you in your significant other and in your relationship?
It's funny. People say, well, how do you work with your spouse? And I mean, Pilly and I met working in the bar world. So we actually, we learned how to work together before we learned how to be a couple. So the dynamic has always been the same, right? If there's a time that we have to be very, there has to be the need for family and business, I'll be all business, she'll be all family, right? And so we've made that pact and had these discussions early on, so we could really be on a clear path. Because usually with the disruption comes up between family or partners, is that you don't have that conversation up front, right? Or you think you're doing right, but you're not asking the question, right? So, hey, I'm working 20 hours a day, and you think you're doing the right thing, but maybe the spouse is like, listen, I just want you home for dinner, right? And because you don't have that question, it creates a little bit of conflict. And so what's important for us is that we have 3 little kids. We wanted to be able to control the day. Like today, they had a school event. We were over at the school event, right? Where we could just show up, where, if not, we'd be at a job where, well, I can't go. I have this job, right? I have to be there, right? Well, we made choices that We didn't want to have to miss something. We wanted to get to do what we wanted. And that's why we continue to make these choices today, so we can do things based on our schedule. And that's been very powerful as part of our decision making going forward.
Wow. You sound like a power couple for sure.
You know what? She's a big part of the journey, and that's you are as strong as your partner in a lot of ways. And she's been one very supportive to my chaos, right? And my change and my adaptability, and also a good grounding source. And that's always important as part of partnerships.
That's awesome. Did you know this from, working with her for a couple of months, or was this something that was developed?
It was developed, definitely was. Peely and I knew each other for a long time before we became a couple, and we both have very, very different strengths, right? Is that she does investor education, talks with investors. She could stay on the phone for hours, and I'm more to the point, right? I get to the point. I'm like, here's what we're here for. Here's what let's do. Let's get to the recipe of what's needed on the call and move on, right? So we both have our strengths of where we go, and it's a good, we'll say, yin yang to the relationship.
It's amazing. And yes, and how do you guys look at deals? Are you buying deals that are value add? Are you buying deals that are stabilized? What do you look for in a deal that you're going to buy and ultimately operate?
Yeah. So we're looking for being able to add value, and that's the majority of our deals. Now, we have, we just brought a building in Cleveland that was built a year ago. However, even on a deal that's built a year ago, the value add component still exists, because you have usually two parts. You have the building and the operation. And so at sometimes it's both, right? You need to fix up the building, and you need to fix up on just how the operations are done. But on sometimes the building is fine, right? Brand new building, but the operations was missing, right? And this building just on its own, it was really missing on the right approach for really marketing and maximizing the right tenant value adds to get the income up. So we were able to come in here, change up the management, put in new marketing principles, new marketing practices, really just to drive the income. And that's where the value add is found.
Yeah. From where did you get your best ideas from? Is it from networking with other investors? Is it from just in the business, you're problem solving by yourself? Or do you read a book or something and come up with new ideas?
It's a mix of everything. You have to be open, right? Because ultimately you have to think outside the box. Is that property management is starting to change, but it's one of the oldest industries using very old principles. And so sometimes you have to ask, is there a better way? Now, real estate's been done forever. It's a very successful industry, right? So there's points where you just repeat the process. You don't need to make everything new, but there's times when there's ways to function with tenants, right? So you think about, our Cleveland building. The traditional way was before is that you have to schedule a time, you have to have a leasing person out there, you have to have that person meet, you have to walk them into the unit. But now between like virtual tours or getting them access for units, right, or just being open to opportunities, you're able to just scale your business and make it a better user experience, right? Because there's two parts that we ask a lot is that, okay, is this good for our side, but is it also good for the user experience? And that user experience can be everything from our investors to the tenants, right? And so we ask that question a lot. And then the question is, how can we? And if you ask that question or not, right, and it typically goes down to how can I figure out something better? Because typically there's a lot of smart people in this world. If you come up with an idea, someone thought of some kind of application, and you just have to go out there and find it. And that's usually the thing, is that if I'm seeking the answer, it's that I just haven't learned the right question yet. And when I can discover and figure out the right question, I typically lead myself right to the answer I'm looking for. And where you have to really tread carefully is it's very easy when you're talking to people, right? So say you're going to call up some government factor or something else, you call the city, right? They're just getting paid by the hour or salary, so their easy response is just to say no. But if you think there's a yes out there, you have to say, okay, am I asking the right person? Do I need to ask 5 times? Do I need to just frame the question differently, right? Because many times if you believe the answer is there, it's that you just haven't figured out the right question, the right person to ask to get the answer.
Yeah. Yeah, it makes a lot of sense. So it's just about problem solving and finding out the right question. And then once you find the right question, is much easier and it's much faster to get the answer.
Correct.
You mentioned your investors. Um, what is your typical deal structure when you were starting out and how is it
Sure.
changed now?
Yeah, so we do a mix of syndication and partnerships, and some of the properties are on our own. And with say syndication was the first model we learned about, and so we just followed that model. And what that means is that we pool capital resources from investors with our capital to be able to buy larger buildings. And be able to buy the larger building, we get the economies of scale back. And so for the investors who are limited partners, meaning they're passive, so they're not part of the operation side of it, is that they get a preferred return. Now, there's no guarantees in the world, but they get the preferential treatment of first returns that come out of the building up to a certain percentage. After that certain percentage of return, there becomes a split of the revenue and the profits after that. And that split can factor in a couple of different ways. There's many different models, but typically we would do an 8% preferred return to the passive investors up front. And then after we meet that mark based on their investment, then it would go to a 70-30 split, with 70% of the additional revenue or profit going to them as the investors.
And right off the gate, that was a structure that worked, and most investors were pretty aware of it and they accepted it.
So I'll say the structure worked because we were following what was competitive in the market. And so you can go on like sites like Yield Street or Crowd Street, and you can look like what's out there in the market. You can look at other syndicators, what they're doing, just to get a recipe of like what's competitive out there. Because you want to make sure that you're offering a product that's one fair, but also competitive to the nature of the market. Now, when you start out, the majority of your investors are probably going to be somewhere in your network. And what you'll find is most have no idea about this. I mean, syndication's it's more in our world now. So we hear it a lot, but in many circles, it's more stocks, bonds, like mutual funds, like all these different things that have nothing to do with real estate, or they just hear about flipping from the shows. So the initial part with investors is the discovery is to teach them, right? That's a lot where Peely comes in. She educates investors about the model to see if this can potentially be a fit and something that can help them, right? Because there's a lot of paperwork you fill in the background and just a lot of other things that the investors will have questions on. So we get ahead of it to try to educate them to the model. So when we have the deal come up, they can make an educated decision to say, okay, is this the right fit for us? And many times there is, because with real estate and multifamily is that you can get cash flow, you can get part of appreciation, both forced and market. You can get depreciation benefits, tax benefits, debt pay down, right? So there's a lot of ways that you can win with multifamily that you could use or need just one of them as an investor, or you could have a couple that could benefit you, but it's always different for how it can work with them.
Yeah, of course. It sounds really beneficial for the investor. And how did you come across these investors when you were first starting out?
Honestly, they're all right on front of your nose. Like, pick up your phone, go to your contacts, because what someone said is don't filter out your network, right? Don't filter it out and say, oh, this person will invest. Just tell everybody, because what may happen is that you might be wrong, right? There might be someone out there that you didn't think would be an investor that ends up being an investor. But also, one of the biggest things was, if we would speak to an investor and they say, timing's off, I just, I paid taxes on our new business, or, I just changed jobs, we would leave the conversation like, yeah, no problem. Like, here, we'll leave you this information. If you want to talk again, we're always here as a resource. But do you have anybody else that you know of that maybe we should talk to that could be a good person for this right now? And most people want to help in the world. We would typically find someone else through that. And so every conversation has some value, because it gets you out to more people, but it also helps you frame and learn your conversation, because you're never going to have the same conversation twice. And you can prepare as much as you want, but you're going to have people ask questions, right, that maybe you're not prepared for. So the more you can have this and get down your talk track, the better it will help you forward when you're really, truly raising capital.
Yeah. And to keep in touch with this investor, do you use a system like an email newsletter, or do they follow you on social media? How do they keep getting to know you and getting to know about your deals and all that stuff?
Yeah, it's like just like anything like Fox, CNN, like people just go to their different news channels and like so how they connect with you. So we open up on a lot of platforms, right? So we have a podcast, the Multifamily Live Podcast talks a lot about that. We also have a newsletter that goes out once a month. We have a weekly webinar. We have two different emails that go out each week, right? So we're in front of people, and it's just how and when they want to check in, right? But also throughout as we continue to educate them. So if they're not ready today, I have investors that, like they've been following for a couple of years and all of a sudden they're ready, right? Because now it's the right time, they got some money aside, who knows, right? But in that front, we allow them just no push, but like we're just in front of them, so they can learn and take in the content. So now when the timing is right for them, they've already had a lot of the questions answered. They can dive right in.
Yes. Yeah. Sounds like a really good process. What about now? Has this changed nowadays, your structure and the way you do deals?
So we typically still do a deal by deal. We don't do a fund. However, at times we'll just do partnerships or just buy properties solely in-house. And so that will be the only change, is that we started with the one model, and the syndication model, sometimes the preferred return will change, sometimes the split of equity will change, and we're just open to the dynamics in the market. So you can be boring and win, right? And that's what we try to do, just a model that's predictable, because there's a lot of things that are just stay unpredictable in life, is that if we continue to do that, but it doesn't overly confuse investors, because investors get confused if you're changing the model on them a lot and if you're constantly changing the asset type, right? So like if I was like, hey, I'm going to get them a motel, and the next week's going to be a land development, the next week's going to be a multifamily property, they're just all over the map trying to figure out what you're doing, and the confused mind says no.
Yeah. Let me ask you, when it comes to asset types, why did you pick multifamily? There is retail, there's self-storage, there's hotels, there's mobile home parks, there's warehouses.
Yeah. Multifamily made the most sense to me. I've lived in apartment buildings. I know a lot of people lived in apartment buildings. It's a housing need. Everybody needs a place to live, right? And so the model was easy for me to understand. And if you look at the dynamics of performance, until recently, multifamily has always been the biggest driver. It's outdriven the stock markets, outdriven the bond markets, outdriven all the facets of real estate, which harbors sometimes with self-storage, which predominantly drives on that. And we're constantly at a dearth of housing. We need like 5 million housing units out there that we're going to be short on at the end of this decade. So if you look at that and you say, okay, housing, it just makes a lot of sense. But where it was the difference, the bigger question was the difference between single family and multifamily, is that, if you have a single family rental and you either are at 100% occupied or zero, right? If I'm missing one tenant on a 100-unit building, I'm at 99% or 100, right? So I still have a lot of ways to win on a multifamily building compared to the single family space. I have one roof on a single family building. I might have one roof on a multifamily building, right? So I have a lot more potential for opportunities to win on the bigger asset than I did on the smaller one.
Mm-hmm. Yeah. I want to expand a little bit about what you do when you get into a deal. Could you tell us maybe your top 3 things that you come in and do to increase the NOI?
So it's going to depend on the property right there, but we'll go in there and there's 2 ways to look at it, right? So you want to take up the curb appeal, and you want to control things that maybe are out of control, because if you have a building, right, and say you're a tenant and the new management comes in, what's the first thing you think? Oh, the rent's going to go up. Well, that might be true. However, if you just show up day one and just raise the rent, it's a conflict between ownership and the renters. And so what we try to do there is clean up the property and also take care of a lot of things that might help optimize the property. So maybe prior ownership wasn't handling maintenance requests, right? We have a bunch of leaks or a bunch of other things. So we'll go in there and try and clean up the efficiencies of the utilities of the property, take care of maintenance requests, do a better showing, clean up just the opinion of the property. And then as we start turning units and bringing on newer units right there, we'll start to continue to raise revenue onto the tenants. So first will be appeal. Second will be optimizing the utility approach right there, just clean up on the maintenance request. And third would be the revenue. Go in there and start matching the revenue to the market. But it's justified because instead of the tenant saying, hey, you just showed up and now you just increase rent, it's like, listen, we want to take care of this property. right? So what's on your agenda? Like, how can we make this work? Because where you do lose a lot of money is that, a tenant has a running toilet, right? And is like, man, I put in a maintenance request or I call maintenance, then 2, 3, 4 weeks, and they're busy with life. They're working 2 jobs or whatever they're working, right? And now they just give up. And now that toilet is running and it's costing ownership a lot of money. So if we can come in there and correct that, one, it helps the tenant have a better experience, but 2, it starts helping our bottom line because now we're starting to reduce our utility expense.
Yeah, I like your approach. You come in with a little love, and you take care of the property, and then you start raising rents after everything is said and done. So I want to know, where are you going in your career? Where do you see yourself going? What is that destination for you, or is it just for the journey that you're in right now?
Yeah, it's a journey, because you know what it is. Like, the destination's always there. Like, I think of goals. Goals are like something that we get scared to start on because if the goal becomes prohibitive. But typically, when you get on the journey, right, you spend 99% of the time on the journey. Maybe you hit the goal, but you don't stop at the goal. It's like losing weight. Like, oh, I lost 20 pounds. Like, it's not like the world stops. I'm like, oh, I lost 20 pounds, right? Well, the next day comes, and the next day. So we simply treat it that we look to have a deal done a quarter. Now, we don't force that to happen, but we try to put in the work that we have the opportunities to have that happen. Now, sometimes we'll do one deal in the first quarter and maybe not in the second or third quarter. Maybe we'll do 2 or 3 in the third quarter or fourth quarter, right? Who knows? However, we try to do that work, and we continue to scale to put out a good property and good product for our investors so we can continue that rotation.
Yeah, that sounds great on the journey. So I wanted to ask you about, you were just talking about the journey, and I want to know what other things are important to you in life. What other things do you like to do besides real estate that make you have a fulfilling life?
Yeah, I like to work out. I get up every day and I do kettlebells and I run, and I do it early so I can spend time with family, right? And then it's good just for that is that we do a lot of this so we can spend time with the kids. Because kids grow up fast, and I've seen it in my own eyes, right? I have a 5, 7, and 9-year-old, but really everything that we're doing today is meant for a part that we can have good lives between Peely and I, but we can have fulfilling lives for our kids too.
Yeah, that makes sense. And I'm thinking, you said that it's about being, put in the work in the quarter so that you can buy one deal. What are some inputs that you do? Maybe, things that you schedule in throughout the day that just get the work done?
Yeah. So we basically break up days, but there's gonna be days where we have to focus on just like every week we'll have a property management meeting with each property manager for each of our properties, even some that we manage in house. So we'll do that on Thursdays, right? Other days are going to be spent for lead generation. So it's just the follow-ups that we talked to earlier, or just new outreach, right? Other days here is going to be on underwriting, make sure we're talking to the performance review of the properties, right? So we break those out because you have to have your funnel built, right, for things to come into the funnel. But once they get to the funnel, you have to have the process to go in there and review them, right? So we'll go through the team, we'll go to underwriting, they'll go to there, see if this is something that makes sense, and we'll go, and then we'll take that to the other factors. Could be, talking to lenders, could be talking to insurance people, just making sure we're underwriting the property correctly.
Yeah, that's great. Now, well, this has been very informational. I want to ask, do you ever ask yourself, like, is this do I want to make $1 billion, or is there a figure that I want to reach, or not really?
Ideally, when it was just starting out, is that you're going from a service world, it was just to create consistency and not have to worry about the next day, right? And we've been able to do that in a good fashion today, where we don't have to. But when you grow from a world of just constantly and worried about if you have money in the account, you realize how quickly it can be taken away. So we've done very well to be able to put a good amount of money away and be prepared for a lot of things in the future, and that was that first step. And so it was getting to a net worth, getting to a certain point for what we have in the bank, and then now continue to build up what we get each month with cash flow. Because ultimately, if you can build cash flow, it takes a lot of the concerns away, because regardless if money comes or go in a month, you constantly have properties that pay you cash flow each and every month. And that's a big important piece. So there's not a dollar amount that's out there. We constantly are looking at different cash flow amounts. And the easy way, if someone's asking like, oh, how I can do that, like look at your expenses, right? Because if you look at your expenses today and you can find something to give you cash flow to replace your expenses, well, then once you're at that point, right? Once we were at that point years ago, like we could basically make all the changes we want and try things out, right? Because now we have the freedom to be more open to try things that could hopefully continue to increase revenue, but or go on trips or do anything in between, because now we have enough cash flow to replace our day-to-day expenses. We don't have to worry anymore about, oh, I need to clock in 9 to 5 because I need to make money for rent this month.
Yeah. What is your, if you don't mind me asking, what is your, how much are you making in ballpark numbers and round numbers, if you're comfortable sharing?
So it's hard to say. It's a constant flow, because what we do have is we have a couple different ways we get paid. We have the acquisition fee we come on, and then we have cash flow that will be from properties, and then we have profit from sale, and then we have asset management fees, right? So the good thing is we have multiple different ways we can win, as long as we're doing a good job for investors out there. However, it comes in flows. It's last year we sold a couple deals, this year we sold a couple deals, and so it's not always a constant flow. So with that, you have to be okay to understand that, and that's why building up cash flow is important, right? Because the cash flows can be predictable. However, maybe you have the opportunity to sell a property that you thought were going to hold for 5 years. Okay, well, that's a huge jump in some of the profit that you weren't expecting for this year. Or the other point is that you buy a property, right? And now you have an acquisition fee that comes in because you had the right opportunity to come in front. So the good thing about multifamily is that you can win in a lot of ways. However, I don't push to say we have to get a deal today for the sake of a deal to make money. We want to make sure the deal is right for the investors. But doing the work, we found that if we do the work, we have consistently a deal flow, which helps to support the money we're making.
Makes sense. So the cash flow is really the thing that keeps you making consistent income. But then there's acquisition fees and exit fees plus the management fees, right?
Correct. And profit, right? Because besides just the cash flows, when you sell deals, right, assuming you've done a great job for your investors, which hopefully you're studying you do, is that you will make a profit from the deal too, right? So that's the cool thing about multifamily, is that you also can win in a lot of ways. And so when you do that, it's something that can consistently build, but it can be unpredictable to nature based on just the timing of events, right? So right now, with the way market is, it makes sense that some deals that could be potentially in a good place to sell, we're going to hang on for a moment because we're going to seek a better return for our investors that may be out there in the future. Where some others, we say, maybe it's time to exit on a deal, right? So it's always what's going to be the best choice for the investors.
Yeah, that makes sense. I want to take the last couple of minutes here. Let's make it towards the beginners who are listening. What are the top criteria again for finding a market and to getting started with multifamily?
So honestly, look at your market first, because I was in New Jersey, and so there was reasons why I did look first, but there was reasons why it was going to be prohibitive, right? It was just going to be a really expensive market with older infrastructure, higher taxes, insurance, harder market, not just price comparable, and then just not great regulatory environment. So that didn't make, and then we just had to look out. And so is there places within an hour that you can get back to in a day or so that have population growth, that have job growth, that have workforce housing, that have some other reason why people want to come there, right? You can look at U-Haul reports where you see the inflows and outflows of markets, but like if I'm in New Jersey, right, that could put me on anywhere between, the Kentuckys, the Tennessees, the Carolinas, the Marylands, the Virginias, the Georgias, right, down to Florida, right? In New Jersey, probably want to go to Washington State because every time I need to do something, it would become some massive ordeal to have to go there, right? So I'm typically looking at places that I can get to and get back to within a day, right? So like the markets we're in now, I can either drive or fly to these markets to see the properties that morning and then be back at night. And so if I have to stay for another, no problem, but at least it's something I can get there easily and I can get back in a time, right? So that's the first piece, and that you can simply win in any market, because I guarantee you, whatever market there is, someone's winning in that market. But I don't go to markets that are too outside I don't want to be like, in Tennessee, there's some major markets like your Nashville's, your Memphis's, Knoxville's, Chattanooga's, Clarksville's, right? But then there's just very tertiary markets that there's no train, there's no plane, there's no bus, right? You're just kind of out there in the woods, and you might find good deals, but they're just very hard to make work because there's just not a lot of people there. There's not just great jobs. It's hard to get to, right? And it's just more difficult. So we try to stay in markets that are surrounding other markets that have reasons that people are going to continue to come here, most notably jobs, right? If jobs are there, jobs continue to come there, people are going to come there. And if you can think about that as part of your investing, thesis, you're constantly in a good place.
Yeah. Thank you for that. And for the people that really want to know what a good deal looks like, what's your advice on learning how to underwrite, learning how to find a good deal, how to have confidence to go and close on that deal?
Sure. You go over to Yarusi Holdings or 7-figure multifamily. We got some resources. We have a lot of videos on underwriting, a lot of things that you can go and they're just free resources. Go out there, right? There's of course YouTube, and on that part you can go and watch people on underwriting deals, right? So on that part, you want to understand like financial modeling, like how are people looking at deals? But where you get the support there is that you can come up with your own assumptions, but you need validation on those assumptions, right? And so finding the right partners to help, and it might be that a more experienced operator, or it might be that, you want to have a management company too. So if you're not going to manage these properties yourself, you want to make sure that the plan you're coming up with can be implemented on the ground, because you could in your mind have the perfect plan, but you may find that you find a property manager, the right one for this property, and they come in there like, oh, you're never going to be able to get those rents. Like, right, this is the thing that fits the market. It's going to be hard to have, that little payroll. You're going to need more marketing, and so they're going to give you very valuable feedback to really enhance your underwriting. So there's the idea of understanding the process to underwriting, but then now it's part, of course, it's part science and art. Is that you have to be able to understand the process, but you also have the art of having the assumptions validated by other team members that you can trust as part of your process.
Yeah, that makes sense. Always have a second set of eyes and go check out the resources. And one thing that I think was not spoken about is you have to find a key principle, right? For the deal.
Depends. Yeah, like in the beginning, we were able to do them without, and we haven't had them. And so it just depends. It honestly just depends, right? And so it just depends on you and we built up. And now with if you're going to find a key principle or a partner there, is that you just want to make sure they're in alignment, right? If their sole goal is to get a property, get it fixed up and sell in a year, and your plan is to hold it for 10 years, it might be a conflict of interest, right? So you want to make sure you align on the goal and the vision of the property and just the vision of how the partnership works. And that helps set you up for success for any of the partners that you may need.
Mm-hmm. And do you have any tips or advice on finding partners to go in on deals with that you can give?
Which strength do you have? Which strength are they missing? That's that first part, right? Because you could, it's, what do they say? It's you either need money, credit, knowledge, or time. Right? Someone's always short on that. You could have a doctor who's really rich and has all the money and the credit in the world, but doesn't have the time and knowledge. And you might come in there with the time and knowledge to go out there and run around and find deals and underwrite deals, right? If you're strong in underwriting and someone else is strong on lead generation, right? Well, that's a good pair. If someone's strong on the capital side and the bank side, and the other person's strong on the lead side and the underwriting side, that's a good pair, right? So it's where can you have complementary skill sets that you could add value to a partnership?
Yeah, that sounds good. And where can people find those people? Where can they go and potentially find someone that they could meet? They're
everywhere in front of you. Sometimes it's harder to go out there and say, hey, do you need this? Instead of being like, hey, this is what I am looking to do, and ask the question out there. Now you can go out there on social, you can go out there to your network, right? You can go out there to just other meetups, right? It's more getting solidified with what you want to do and what you're good at. Because if it's me just going to one person at a time compared to me just saying to a bunch of people, right, I'm going to get more mass adoption if I go out to a bunch of people. But it's more saying, hey, here's what I'm doing. here's what I'm very good at. Here's where I can add value to a mass opportunity there, that you're going to find more networking opportunities to have more opportunity to meet the right partners compared to the other way of just saying, trying to find that one perfect person, right? Because they may not know they're looking for you. But when they hear you say that, they might be like, oh, you're a perfect fit. I'm not good at that at all.
That's amazing. So be very vocal about it. And thank you, Jason. Jason, where do people find you if they want to learn more about what you do?
Yeah.
Maybe be an investor as in one of your deals.
You can find us, Jason Yarusi, on across social, Yarusi, but you can also, you find me over at Yarusi Holdings. That's our company website for our investments. I just launched a new podcast called Live 100 with Jason Yarusi. You can find a lot about us and this our thought track and our mentality over there. So a lot of different ways, but those would be the main that you can jump in and find us.
Thank you, Jason. And last thing I think is, how important is mindset, and what can people do to get the mindset to be laser focused on their mission, just like you have been?
I heard someone say it so well the other day, is that, you can't prove your net worth without proving your self-worth, right? And if you think about that, it's just that, like, you have to be ready, right? And you have to be mentally ready. The journey's not going to be perfect, but why should it be? And so you have to be ready, disciplined, to constantly be committed and constantly persevere. But it all starts with your mind, because every single day of the day just begins again, right? And it's just part of that journey. And if you're on it and you're here, and a lot of people this year show I'm here, committed to go, right? You have to know it starts with them. No one else is going to be the magic solution for anybody else outside of themselves except for themselves. And so when you say, hey, I take control, I take ownership, now is my time, what's going to stop you? Absolutely nothing, because you're the one who's setting the stage. You're not worried about anything else falling in place, because you already know it's going to happen.
Thank you, Jason. We appreciate it so much. We hope you come on again sometime, okay?
That'd be awesome. Great questions. Thank you so much for having me.